What should investors do with e-commerce names heading into the new year? Here to discuss, CNBC contributor Alex Kantrowitz of the Big Technology newsletter. Alex, good to see you again. So, it looks pretty bleak. Does that mean it's time to buy?
Well, look, the last time Amazon had a decline like this, it dropped 80% in 2000, and the people that bought did pretty well, I would say, off of that trough. Now, the question is it done dropping? It's down about 50% on the year. And of course, that's coming off of like very intense overvaluation that happened during COVID. So it's not exactly the same picture as it was back then, but it seems like it's much cheaper and maybe a good buy.
So, Alex, first off, first time I've ever seen you in a tie. You're throwing me off. I'm in a tie. John's always making fun of me. Number
Just
two,
bringing the holiday season in.
You're dressing it up. I like that. Evercore ISI out with a note yesterday that the majority of Amazon's retail business is consumer discretionary, maybe even as much as 80% of it. Obviously, the consumer is softer than it has been in years past. How do you think that weighs on these results? People aren't buying their groceries necessarily from Amazon. They're buying other things they want.
Well, I think you look at the amount of money that's going to go through Amazon, and it sort of lets you put some cold water on this idea of like a massive slowdown. Now, before the pandemic in Q4 2019, Amazon did $87 billion in revenue. This quarter, it's going to be $140 billion at the floor, right? So it's not like the company is falling apart. It is coming up against a very different investor climate and expectations that have been a little bit out of whack. So as that modulates, it might be, a different story for Amazon. But I don't really think that Amazon is going to struggle in the way that people are painting it out. This is not a doomsday scenario for this company.
Certainly not in results. I wonder about valuation. And part of the reason why I wonder is earlier this year, there seemed to be this big, decrease in faith in Amazon with their oversupply in the warehouse business, and they had hired too much, and they was like, oh, has Amazon lost it? Did that cause the kind of reset where now we see the stock back down near the lows of the year? It actually might be cheap, even, regardless of how the holiday season ends up. And maybe cheap is too strong a word. Reasonable relative to some other things.
Yeah, it's a lot more reasonable now than it was when it was double the price. But the bear case for Amazon is completely reasonable. If you look at these companies, right, they're valued highly based off of the fact that they have high margins and they grow fast. They're obviously not growing as fast as they were during the pandemic, which is expected. But investors and Amazon itself believe that growth curve would keep going. It hasn't, right? Then you take a look at margins, which is the second half of the equation. And the company built as if that growth was going to continue. And it built like crazy, investing in things like fulfillment centers without fully understanding whether those would, be needed. And now it has a moment where it has to cut costs. So you're looking at growth that isn't as high as expected and margins that aren't as much as they would be because the company needs to cut costs now. And it can be bleak if you're thinking about whether to invest in the bull case. So it's going to be a struggle on that front. The real question here, I think, is whether Andy Jassy, the CEO, who comes from the Amazon Web Services side of the company, right, spent a long time there before taking over, whether he has the ability to cut costs as if he would be a retail CEO, right? It's a completely different world when you're in the high margin money printing business than when you come and now you're in charge of the retail business, which is much, much more difficult, much more cutthroat. If he can show that he can do that, Amazon's probably going to be in good shape. If he continues to struggle and hasn't been pretty to this point, then investors are going to probably be in for more pain.
Alex, you hit on a great point. When it comes to their retail business, a lot of people felt like Amazon built their church for Easter, if you're familiar with that saying. They built for e-commerce just to keep growing and growing and growing. One part of the story we haven't talked about when it comes to their retail business is the rising dollar. They're actually getting a break this quarter. The dollar's down about 7% in Q4, but that also helps their cloud business. How do you see that impacting potentially their cloud business, the results and things going forward with that?
Yeah, the dollar is right now, it's coming back to earth, right? It was so strong for a long time. But it's starting to modulate. And I think the foreign exchange headwinds that companies like Amazon and its fellow big tech companies aren't going to be the doomsday scenario, the end of times like it thought it was going to be. I think it will still hurt, but it could end up being less of a problem for these companies than originally anticipated.